the deficit numbers get too high as a percentage of GDP, that's going to start affecting the US dollar, strength of the US dollar. And we've also seen the total debt just continues to rise. Where now I think it's 125, 120% of GDP, which has started to get into kind of a riskier territory. Also, I don't think the recovery was never as good as what the newspapers and the major networks have led on to believe. They've talked a lot, especially Trump, about unemployment rate, which is, again, very good, but one thing they don't talk about is, never hear them talk about, is the participation rate. And we can see here the participation rate, which is all people in the population 16 years and older in the civilian workforce that are either employed. And we can see that peaked out at about 67. Basically this was back in the 60s and that, and 70s was women coming into the workforce, so this trended up. Then we had the big recession and we dropped right down to 63. And that number really hasn't came up that much. I think we're up maybe 1%. So this number in here, if you take the population of the United States, is still about probably 10 million people that never re-entered the workforce. Of course, some of that's retirees, but some of those might be people that just got forced out of the workforce too, and have just decided to retire. We got bad news out of Japan. Year-over-year gross domestic product was down 6%, which is huge, and it's being affected by the coronavirus, along with South Korea now, which is a big manufacturing country, and I think this is going to have extended impacts on the supply chain. Again, the inverted curve, the yield curve, as I mentioned the other week, is more inverted now between the 13-week and the 5-year, which again is another symbol of a recession. And we've also seen gold really start to take off, so that's a bit of fear in the market of people moving their money out into something that they totally outside of the market in currencies. And so we've seen gold move up over the last 2 weeks quite a bit. I can show that here. And today it's really jumped up a lot, but we can see gold has moved this year from around 1480. Now we're right up to around 1700. So that's quite a big move for gold in a short period of time. And there's always been rumors that the Fed tries to control gold prices from moving too much, because they don't want people, they don't want to see the US dollar threatened by some other commodity. So that's something to keep an eye on. Of course, gold and silver are kind of related. Silver is used more for manufacturing and that type of thing, not so much as a safety asset. But in the last week it started to actually move up quite a bit. So that's kind of my feeling, that I'm still basically going to be sitting on the sideline with quite a bit of cash. I think even in a month or 2 or 3 now, as this continues to play out. But what I did on the short side, I can show a few here that I now have short positions in. Short basically means you borrow shares to the market, hoping to buy those back at a lower price and then returning them to the owner. So it's just the opposite of going long. So I did and actually these are all just because it's such a bad day today, and I did open some of these up on Friday. They're all making just a little bit of money right now, but again, if coronavirus shows some improvement, the market could still turn around on a dime like it has many times in the past. So I would just have to probably close these out. I'm not going to do that on one good day in the market. I think we maybe started to set a bit of a long-term down trend here, but time will tell that. So this one here is CoStar Group, CSGP, VeriSign, VRSN, and I did Domino's Pizza just because earnings came out and the price had jumped like 16% in one day to me, and I've talked about Domino's Pizza in the past. I had a short position on it about a year or so ago, and I was wrong. But it's one of these companies that's basically just been buying back shares, as I mentioned in my previous video, and has a negative book value. Also, I did one on Paylocity, that's PCTY, and one other one which is Avalara, and that's AVLR. I'm not going to go into the fundamentals of all these stocks, but basically they've all had parabolic runs that are trading, a lot of them at 15 to 20 times sales. I mean, that's 400 to 500% higher than what most even good quality growth companies would trade at. So they've kind of been on the momentum run. As far as doing short calls, I've done quite a few of those. I won't go through all of them, but I have done it on Trade Desk, TTD. As you can see, it's down quite a bit today, but it's trading at 260. But I put the short calls up at 400 and 450. Again, giving myself lots of room, and because the overall volatility of the market is up now, you can go a little bit further out because the premiums have all increased with the VIX, which the VIX today is trading at, the VIX today is spiked all the way up from 24, when just a few weeks ago we were down to 13. So this increase in the VIX means all the volatilities for all the options have increased and all the premiums have increased. Another one I've done quite a few short calls on is Coupa Software, COUP. It's trading there about, 152. I put them up at 200, 210, and 230. So they're all looking pretty safe. But that's just to give you an idea. There's lots of these. I even did one on Tesla. Tesla's volatility is over 100%. So you can get really high premiums, and didn't even have to go out that far. I did a premium for this April for $1,880 as a strike, and I got $11 for contract for that, which is $1,100. So to me, the odds of Tesla in this market environment right now doubling is pretty, is not too much chance of that. So, and there is another one Galactic. Yeah, this. So this stock was crazy. It's Virgin Galactic. It's basically for people who want to into space, and it's going to be years before they probably actually have the service available. It's trading at something like 2,000 times sales. It's just ridiculous. The price went from down here at $6 all the way up to 40 something, and then it's kind of tailed off, but with the volatility so high, I was able to come up and do short calls up at 50 and got $5.30 for that. I did another one at 58, got $5 for that, and did another one at 58 to June 280. So to me, those are all pretty safe. So that's kind of the way I'm hedging the market now. I almost like to see the market continue to correct, and I'll continue to grow the cash on my long positions, increase my short positions, and continue to do short calls, and hopefully I can either break even or at some point turn around and start making money in a falling market, which is difficult to do. But if we do get into a bear market here that lasts, say, 6 months, a year and a half, which we're long overdue for, then I don't think it'll be too difficult to make money and continue to increase my net equity. Anyways, that's it for this week. Thanks for tuning in, and I'll try to get another video for next week. Thank you. Bye.